So what happens when a technical breakdown, a crisis of trust, and a market-wide panic all decide to hit the same cryptocurrency at the exact same time? Well, today we're explaining the perfect storm that just sent Verasity, or VRA, into an absolutely dramatic plunge.
Yeah, you're seeing that right. A drop of over 17.5% in just 24 hours. Now, while the rest of the crypto market barely even flinched, VRA basically just fell off of a cliff. So the big question on everyone's mind is, what on earth just happened?
This wasn't just one bad day. It was like a three-front storm. First, you've got a pure technical breakdown on the charts. Second, a serious crisis of trust started swirling around the team's own wallets. And third, the wider market just turned completely hostile. Okay, let's start with that first wave, the technical.
Right, so the first piece of this whole puzzle is purely technical. If you look at the price charts, a really critical floor that had been holding VRA up for weeks it just completely gave way.
And looking at the dashboard here, you can just see all the warning lights flashing red all at once. The RSI, the Relative Strength Index, hit 18.16. I mean, that is deep in extremely oversold territory. The MACD, another key indicator, was basically screaming bearish divergence. But here's the real kicker. All this chaos was happening on incredibly thin volume, less than $6 million. That means it wouldn't take much at all to just push the price right over the edge.
So oversold, what does that actually mean? Well, think of it like stretching a rubber band to its absolute limit. Normally, right, you'd expect a really sharp snapback, a bounce in the price. But with VRA, even though it was primed for that exact kind of rebound, there were two other powerful forces just holding it down. We'll get to those in just a moment.
And this just brilliantly illustrates the chain reaction. The very moment the price broke that key support floor, right around that $0.00314 mark, it set off a domino effect. Automated trading bots, the ones with preset stop-loss orders, they just began selling instantly. And that pushed the price down, which triggered more bots and then more in this classic unstoppable downward spiral.
But look, that technical breakdown, that was really only the trigger. The second, and you could argue more damaging factor, wasn't on the price charts at all. No, this was happening on the blockchain itself, and it sparked a full-blown crisis of confidence in the project's own team. It all started with some whispers on social media. Some on-chain analysts started spotting something. Well, something pretty concerning. Large amounts of VRA were moving from wallets controlled by the team directly onto major exchanges like OKX and KuCoin. Now, in the crypto world, that is a universal red flag. It almost always means one thing: the team might be about to sell.
And this fear was just amplified by a much, much bigger problem: dilution. As you can see right here, a staggering 90% of VRA's total supply isn't even in circulation yet. So suddenly investors were worried about two things at once: the team selling their current holdings and the potential for this massive hidden supply to be dumped on the market down the road. This created this fundamental tug-of-war for investors. I mean, on one side, you have everything people want from a crypto project: transparency, decentralization, super clear rules. But on the other side were the fears of what was actually happening. Potential team selling, centralized control, and this looming threat of dilution. Trust was just breaking down.
So you've got a technical collapse and a major trust crisis. Now let's add the third and final element of our perfect storm: a totally hostile macro market. Just when VRA was at its most vulnerable, the entire market pretty much turned against it.
And the difference here is, it's just stark. I mean, look at this. The broader crypto market dipped by less than 1%. VRA, meanwhile, plunged over 17%. So this wasn't the market dragging it down. VRA was in a league of its own here, a really dramatic outlier. The whole market was just running scared. The Crypto Fear and Greed Index was sitting at a low 31 out of 100, which signals widespread fear. And when fear takes over, investors don't experiment. They flee from the smaller, riskier projects like VRA and just run to the perceived safety of giants like Bitcoin.
And in this really fearful market, VRA had a narrative problem. See, it was a hybrid, part ad tech, part AI, part GameFi. But traders weren't looking for hybrids. They were chasing the pure play AI tokens. And with its other niche GameFi, also in a slump, VRA was just left stranded, without a compelling story to attract all these nervous buyers.
So, let's put it all together. This wasn't just one thing going wrong. It was three completely distinct forces: the technical breakdown, the crisis of trust, and the hostile market,
all converging at the worst possible moment to create one, well, perfect storm.
You can think of it like this. The technical triggers, they open the floodgates. The mistrust around the tokenomics, that provided the fuel. And that broader market rotation, that was the hurricane that just amplified it all. A true, perfect storm.
So of course, this leads us to the critical question now. Given the scale of this collapse, what should we even be watching for that could point to a potential turnaround? What are the green shoots to look for?
So what would a real recovery actually look like? Well, the source material points to 3 critical signs. First, those team wallet sales have to stop, period. Second, we need to see on-chain data showing that the big buyers, the whales, are starting to accumulate again. And finally, the team has to deliver a clear, meaningful overhaul of their tokenomics to deal with those dilution fears once and for all.
And that's really the crucial takeaway from all of this. While the price might be extremely oversold and definitely due for a technical bounce, the path to a sustained recovery for Verasity, well, it's going to depend far less on chart patterns and far more on the difficult, essential work of rebuilding investor confidence.